Let's take a trip to Germany because there's some absolutely amazing cycle patterns. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We go here to the stock markets, and Germany it is in northern Europe. You have a 61% here gain from the low, pretty close here to the 52-week highs. If we go here and first look at the charts, like that, let's remove this notification. So this is the very big picture for the Germany ETF EWG from iShares. And something I have drawn in here are these cycle patterns. If we go very far back, they did play themselves out, but they became really reliable after the global financial crisis. So if we move them a bit down, you can see that price moves very closely to the time cycles. And here in the middle of the time cycle almost nailed the top. Here you see that we top towards the middle of the time cycle, and you can see this rising and declining phases in the price itself. Here again. And if we look at the current period, the recent rally, it is approaching the later part of the rising phase. If you look at the trend here for the German stock market, we have seen there's been a general trend of higher highs and higher lows, except, this C plunge, which was something different. Here are some comparisons of times where we had an elevated PPO and RSI, and we were approaching the later part of the rising phase here in the time cycle. Based on the previous patterns and these series of, generally speaking, we see these, higher highs. It is possible that we are going to actually see a bit of a breakout, from the current rally. So it is possible that we are going to get, above this price. Here we see some of the previous breakout rallies. So from this breakout to that cycle high, that was around 12% breakout. Then, you get around 10-ish% in the other, breakout. So based on the two previous breakouts, if we were to break out above this previous cycle high, there could hypothetically be 11% left here in this rising phase. That would be a very major breakout though, because that would also take us above the resistance from before the global financial crisis. So the bulls, they need substantial momentum to pull that one off. Let's look here at the daily data points. So way back here. So the thing about these kinds of markets or stocks or what have you that move in these very big time cycles is that they are extremely well suited for long, short portfolios, market neutral portfolios, because like during a rising phase, you can make decent money being long. Here, 58%. A bullish move. Just down here during that part of the cycle is minus 31%. Of course, down here you have a epic minus 51%. But you can see that it moves in these waves, which means that there's a very high probability that we're going to have a more meaningful pullback when Germany pulls back, because that is literally the history. Looking here at the PPO and the RSI, we have been, look a bit, yeah, we did recently pull a bit back from a very elevated level, so that was expected. But generally speaking, we have the ability to be somewhat overbought for multiple days, but not that much. You see that it's rare for us to stay overbought. Judging by the PPO, we have been able to be, the PPO is also, it is in a higher risk territory. But if you look at some of the previous PPO readings, they did signal a pullback, but they didn't here on the daily data points signal the cycle high. Okay, so let's continue. We go here to the seasonality. So the seasonality is very supportive of April. 70% of the time it closes higher than it opens, and we usually have a 4.4% gain. But you can see that May and June are significantly weaker. And you also see that July and August are messy. And this does corroborate what we saw here with the time cycles. If we go here to Finviz, they draw the trend lines. We do have a breakout above the trend line. Finding support at the trend line, that could be a good signal to consider bullish positions. But a breakout above, especially if when it is from an already existing trend channel, then the breakout, it is bullish, but it also is it's an elevated risk situation for the bulls. If we compare the S&P 500, which is America, to the EWG, looking at the price to earnings is minus 40-ish% lower in Germany. Dividend 1.33% for America and 1.89% for Germany. So it's a bit of a better dividend. If you look here at ETF, the holdings, something has happened here with these holdings. They were more detailed before. So let's go to ETF.com instead. I'm really on the fence about whether to use ETF database or ETF.com because they do have their pros and cons. What I have found is that ETF database, they tend to be more updated when it comes to the price to earnings. Maybe they calculate it a bit more frequently, though there are some additional details with ETF.com, and especially now if they have changed how they display the holdings, because before you usually got a very detailed breakdown, but now if that is removed across the board, let's also look here. Yeah, that's not good. But here we have ETF.com. So we can see that for Germany, financials and consumer cyclicals and tech are pretty big. But when we look here at the percentages, it's relatively evenly distributed, and you can see here in the pie chart that it's nicely balanced between the sectors. So it's a good diversification. Here are the top 10 holdings. So you got some big names, of course. You got the Daimler. We know they are behind the Mercedes-Benz brand. You got Siemens. You got Adidas, Deutsche Post, Volkswagen. Yeah, a bunch of very, very, very well-known companies. BMW. Yeah. Okay, so to sum up my take here on Germany, I think that it is possible, judging by the time cycles and the seasonality, and also, the fundamentals, that there could be more left to this rally. However, looking longer term, the next big move, due to the cycles and all of that, will most likely be to the downside. Because that is literally all the history we have here for this ETF. For this stock market, it very obviously likes to move in these big rising phases, but also big declines. So definitively very well suited for, those long short portfolios. So the big move will be to the downside, but there could be a little bit left in the rising phase. So looking short term, it is fully possible that we could expect maybe a little bit more of a rally. It would be very ideal for Germany here to at least have a breakout above this level. Maybe this is a bit breaking out above the highs from before the financial crisis. Maybe that is a bit too ambitious, given that the current economic situation is very messy. But yeah, that basically is my take. I think the key thing here, the take-home message, is that when it comes to long-short portfolios, which I am a huge fan of, you can see here very clearly in the chart that there actually are markets that are very well suited for those portfolios, where you can actually profit by both being long and short during an overall bull market.